OPEC saying it's going to hold off on increasing production through into the spring, March 2025. What does that tell us about the markets right now?
Well, I think it's fair to say that OPEC realizes that, or rather they've made the choice to not bring back barrels during the time of the market when we always build crude stocks, because that's when refineries go down for maintenance. Prince Abdulaziz in particular has always said that he doesn't want to add inventories into a building market. The whole focus has been keep inventories low and keep the market steady. I think the bigger thing, more than the 3-month delay, is they've actually slowed down the pace of return. Initially, all these voluntary cuts were supposed to come back by September of next year. Now it's only going to come back by September of 2026. So incrementally, like every month, you're basically bringing back only 120,000 barrels per day. And even with the new UAE quota, it's about 135,000 barrels per day rather than the 180 or 200. So it just tells you that they realize that bringing all that oil back to the market altogether could have had a bearish impact. The whole focus is we don't want to create an oversupplied market. I know that's not what the narrative says and that's not what sentiment says. I don't know, Hussein, if you agree with me on that.
Look, I ultimately think that this idea, so yesterday we talked about this idea that OPEC is going to flood the market. I have a hard time with that. They've spent the better part of 2.5 years bringing inventories down, cleaning the market up. I'm not in sort of the consensus camp with balances next year, but I think this does indicate their willingness to continue to manage the market. A lot of folks yesterday tweeting, talking about, the deal is dead, the organization is falling apart. I think if you look at the information that's come out of OPEC today, it shows a tremendous amount of cohesion. Yeah. That's not to say that balances next year look extremely tight. I think Amrita can talk to that, but it's not the bearishness that some people I think were thinking was around the corner.
But what I find interesting is even with the deal, which I would say unequivocally is bullish, given what they've done to balances. They've wiped out the surplus for most part. The narrative is still saying, oh, this is not going to stick, or they're all cheating. So it's a hard place for OPEC, right? Whatever they do, somehow people aren't impressed with them. But I do think, to Hussein's point, the market will realize over time that this is actually a very good deal, and the surplus that everybody's expecting next year is not going to materialize.
So if we take that idea of cohesion and OPEC, that they're seeing things the same way, they're working towards the same goal, not the only people on the planet taking oil out of the ground. What do you see in terms of supply side outside of that organization?
We've got 1.5 million barrels per day of non-OPEC supply growth next year. It's a big number. I think Hussein's going to be like, how dare you have that number? But the reality is this year, everybody had a very similar number, and we are now tracking only 300,000 barrels per day of growth. A lot of downside this year from Brazil, from the US. And given the WTI curve is in the 60s, I would argue, yes, we have, we've got under 1.5 now, but there is downside risk to that number than upside.
I think the market has consistently, I don't envy the job that Amrita has. She does a very good job of it, but the market has consistently overestimated non-OPEC supply growth, and of late has generally underestimated demand growth, maybe outside of China. I think, and maybe we talk about China, but I think if you look at 2025 balances, people are sort of more pessimistic, partially because they're taking the weak China data from this year and extrapolating it into perpetuity. And I think that's probably wrong as well.
So we're talking about supply here and obviously what OPEC can do in terms of the supply that they're going to put on the market. What about that demand picture? I mean, how is that situation actually playing out? We keep hearing about slowing global growth.
Sure, I'm not going to debate that. Demand growth is slowing, but is demand falling outright? No. And I think there are two fundamentally different things, and people conflate the two issues. Similarly for China, which has been bearish this year, it's going to be down year on year. However, that is as much to do with their economy, which is really struggling, and that's why a lot of the stimulus is going towards shoring up the economy, and not everything to do with their green policy. And yet I'm sure you've seen in all media outlets how EVs are taking over the world and Chinese oil demand has peaked. No, Chinese oil demand hasn't peaked. We do expect it to grow again next year. Small growth, no longer the 1 million barrels per day of growth, more like 300,000 barrels per day. But there are nuances that people are missing. And I do think the steady state of like 1 million barrels per day of oil demand, yes, it may not be 1.5, is still going to be more, or rather longer than a lot of people think, and we're just not investing enough over the medium term. I'm not talking about the short term, right?
If we're missing those nuances, I mean, what are the longer term implications? If we're sort of, we have this picture, we have this narrative that we believe in, there's actually things happening in the real world that we're missing. How does that play out in the longer term?
What do you think? You're the one investing.
Well, I think, look, I think the issue, and it's oil, it's the rest of the commodities, and we've talked about this at length, like we have starved capital from the commodity space broadly over the course of the last 10 years. We've benefited from the sort of super cycle, which brought all this production that we see in the market today, whether it's oil, copper, et cetera. But if you look at balances, if you look at supply and demand, notwithstanding the weak demand growth that we've seen this year, inventories are drawing and they're tight. And I think that's what people, I think, are conveniently ignoring. Even if I have a surplus next year, which Amrita's balances don't show anymore following the OPEC announcement this morning, even if we have a surplus next year, it's from a very, very low level. Yeah. So I've drawn my savings down to de minimis levels, and now, now I'm going to build that back, but it's de minimis relative to demand, and it's de minimis relative to history. I think that's a problem.
But also, I think the challenge is that people somehow forget, or rather they don't take the bigger picture view. They just basically recency bias is a big problem in our industry. And then everything is now, okay, China's peaked and oil demand's never going to grow. Even right now, we're about 103 million barrels per day. We think we're going to go close to 110 as the peak, and then even by 2050, we're just below 100 million barrels per day. And I was saying this to Hussein earlier, that people forget this, that just to maintain production at 100 million barrels per day, we need to invest $550 billion annually. US. Yes. I'm aware of the sensitivities about currencies over here, but US dollars. And I think that is an enormous amount, which we're not doing. We haven't done for the last few years. And if we believe that shale oil, not NGLs and gas, is peaking because of tier 1 acreage running out, we need to invest even more because offshore oil is actually often much more expensive. So again, if we can just get our heads out a little bit from the, this year, next year kind of balances and look maybe even 3 years, not even 5 years out, the picture looks very different.
So we've hit the big topics here: supply, demand, the health of the global economy, whether we're actually setting ourselves up for the future. In the here and now, are we a little bit surprised where oil is trading at, considering what is happening on the planet? I was in journalism for 25 years. I cannot keep up with the news flow anymore, at least intellectually or mentally. I can't digest it. What's going on with the price of crude, given all the geopolitical risk out there?
There is no geopolitical risk priced in oil whatsoever. And I would say, in some ways, as an analyst as well, it's been an extremely frustrating year because Hussein rightly pointed out, inventories globally are super low. Every single correlation that has worked historically has broken down. You would think, and we've run these correlations even in the summer, when the backwardation, which is essentially saying, crude oil markets today are tighter than tomorrow, that was very steep. And flat, if you did the correlation, it would tell you that prices of crude oil should have been about $87. We were at 72, right? So people are just not investing in oil, again, partly because of all the reasons we've talked about. And now the new thing, which is regardless of the Iran policy or what OPEC is doing, Trump will somehow get oil prices down. So I don't know, you could pick any reason right now and you just want to go and hate on oil, right? That's the feeling I get. I know that's not a very scientific statement, but genuinely, you can see that in a lot of the quant analysis that our team does. You actually see the amount of participation, like in terms of the notional value rather, it's just super minimal. And most of the people who are trading it are actually on the short side because they don't believe prices are going to go up, I'm sure. I mean, like you said, you are the contrarian here.
Well, and I think the other issue is that this sort of long-term idea that we're not using oil, so why am I going to spend resources trying to understand a market that is disappearing? I think that's part of it. I think the other issue is that if we look at other assets, equities in particular, they're up 30%. The Sharpe being long equities has been superior to probably any other asset class. So I think resources are have moved away from the commodity space. There's less people focused on it. But ultimately, the data that Amrita tracks, like inventories continue to draw. And I think at some point, the rubber meets the road, unless, by some sort of miracle, we're not using oil tomorrow. You mentioned something today at lunch, which I thought was very interesting. Can you talk a little bit about the sort of robustness of oil demand? And you said something that I hadn't heard before, but oil demand during COVID, what happened?
Yeah, the COVID thing I personally find, because there's a lot of debate, right, about oil's going to go down to 40 million barrels per day or 60 by 2050. April 2020 is probably my best data point example. All of us were stuck at home, right?
We're not driving, we're not flying.
Not flying. Industrial production, 97% of the globe was shut down in terms of industrial production. We consumed, do you want to guess?
In terms of how much oil we're consuming, even the fact, though, that we had that weird thing where oil went negative for a bit, what were we consuming?
I asked you the question, but I'll give you the answer. 80 million barrels per day.
80 million barrels per day.
Wow.
So the run rate right now is 104 million barrels, 103, 104. When the world stopped, it went to 80 million barrels a day.
So that for me is the thing, like stop debating about this. Like yes, we were all home ordering stuff, but you could see that diesel demand, trucking demand was still going because people still need things, i.e. there's still movement in transportation to an extent. So if you think the whole world stops and you consume 80 million barrels per day, how are we going to get oil demand down to 60 in just 20 years' time when population growth is continuing in the world, like globally? There's 700 million people just coming to kind of the basically urban cities and just coming over to the middle class. And if you believe that economic growth goes hand in hand with population growth, then energy demand has to grow, and oil is going to be a part of that. So that's where I find the disconnect over the medium term, that we forget how inelastic oil demand is versus all the talk about oil demand has peaked and it's never going to grow.